Okay, what is going on, CYPRX Advanced YouTubers? Welcome back to another CYPRX YouTube video. As always, if you guys are interested in learning about cryptocurrencies, commodities, indices, and foreign exchange, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, this is going to probably be one of the most comprehensive breakdowns that I've ever given, so stick around for this YouTube video. Now, the methodologies that I'm about to teach you all, okay, you guys can utilize the information and the gems that I'm going to give you all in this video on cryptocurrencies, Forex, commodities, indices. It doesn't matter what it is that you're trading or what financial market you're looking at. You can apply these techniques and these methodologies in your technical analysis, okay? Again, this is nothing compared to what I do give to the CYPRX Advanced students. Anybody that is interested in advancing their technical analysis a little bit further and diving deep into technical analysis and how to properly understand the markets, the link is in the description down below for that mentorship. Without further ado, let's jump into today's video. So I'm going to share a screenshot for you all today that I sent to the CYPRX group chat in the GBP/JPY chat, giving out bullish and bearish targets on GBP/JPY. As you guys can see, I sent out this group text on March 10th, 2022. Okay, so as you guys can see, this is on the charts, March 10th, 2022. This is where the daily candlestick opened right here. This is when I sent that message out to the CYPRX students, and it reads, GJ bullish targets 154.00, bearish targets 152.00. And then it also reads, I am bullish on GJ until we have a 15-minute break and close below the 152.00 level. Okay. And as you guys can see, now what did we get? We had a meltdown straight into the bearish targets to the T 152.000. And then we had a bullish rally to the T of the bullish targets into 154.00. So in this video breakdown, I'm going to explain to you guys in advanced detail how it is that I got these targets. Again, I can't give you guys all the gems, but I'm going to do my best to synchronize the amount of information that I have that I give to the CYPRX students and convey that to the YouTube channel, so that way you guys here watching can get some gems as well. So that way you're not fluttered and clustered by all this just crap that is on YouTube, okay? So in this video, we're gonna go over why it is that I was targeting these areas. We're gonna go over time in the market, okay? That is extremely important. I can't give you guys all the gems surrounding time that I give to the CYPRX students, but if you guys have been watching this channel for quite some time now, you guys hopefully have picked up on some of the things that I teach, okay? Now, all right, as you guys can see, not to brag or boast, this is very common amongst the CYPRX group chat and amongst the CYPRX students, and as well as my technical analysis. It is extremely accurate because we trade logic in this market. We're not hopium traders. We're not giving bullish and bearish targets that are unrealistic. This isn't the signals group, okay? The CYPRX traders are more than welcome to take these signals if they please, but usually on Monday or Tuesday, I give out bullish and bearish targets surrounding the pairs that I trade or the cryptocurrencies that I do trade at the beginning of the week. So that way the traders can see the analysis play out throughout the week. And as you guys can see, I sent this March 10th. The traders had plenty of time to indulge themselves in some decent technical analysis to catch a down move. And then they also had some decent time to indulge themselves into some bullish reactions from this 152 psychological level. And they could have rode this wave. Okay, just look at the dates. Okay, March 10th is when I gave this call out. So this was a total of 113 pips that the traders could have capitalized on to the downside had they have paid attention to the signal that I gave them. And then to the upside, okay, straight into 154. This is a matter of around 215 pips. So let's just round that up to about 350 pips in total that I gave to the CYPRX students in one trading week. All right. So I highly, suggest that you guys stick around for this breakdown. Okay, I'm going to be giving you guys lots of gems, going over the higher time frame bias and going over why it is that I chose these levels to shout out to the students. Okay. And I've done this on a weekly basis now for almost 4 months in a row, where every week, back to back to back to back, I give bullish and bearish targets that get smacked out to the T. And again, this is all due to logic in the market, attempting to trade in tandem with the banks and institutions, i.e. knowing that institutional smart money trades on higher time frames, not these fractal, minute charts, okay? So we need to understand where higher time frame liquidity lies. We also need to understand time in the market, and that each and every single session operates via manipulation, as well as getting in an interesting amount of pips or a certain amount of pips in their certain time period, all right? And then obviously, of course, going into detail on when those times are, I give those to the CYPRX Advanced students on when the institutions take positions via certain time manipulations in each session. All right. So let's dive into today's video breakdown, giving you guys the first target of 15200. Let's first cover why it is that I chose this target to give to the CYPRX Advanced students. And as you guys can see, we had a bearish meltdown straight into the area that grabbed liquidity, a bullish reversal, a higher low that sent straight into the 15400 level. Okay, so let's replay price action and just go over. Let's start from March 10th. Okay, so March 10th, candlestick open on the daily time frame. We'll play that out just a little bit so that, okay, Asia session starts, right? This is the area that the daily candlestick opens up. Okay, so we're on the 15-minute chart. Let's go ahead and we'll switch to the hourly. All right. Now, the hourly for us as scalpers, okay, here at CYPRX is the most crucial time frame, in my personal opinion, to take positions off of. Meaning that what we're going to be focusing on is paying attention to where banks and institutions last took orders from in the market, meaning that if we're in a current uptrend, okay, we're currently respecting bullish order flow. All right, I'm not going to, explain what bullish order flow is. That's the definition of an uptrend, making higher highs, consecutive higher highs, higher lows, higher highs, higher lows. You guys can see that in price action here. Our goal as traders is to understand that bank and institutions are not going to sell unless price is at a premium, and they're also not going to buy unless price is at a discount. Okay, so some of the methodologies that I teach to the students is to pay attention to where previous sessions purchased from. And as you guys can see, okay, if we're New York session traders, where is the most ideological place that if this general area, okay, let's say this general area here is going to be New York session, okay, and New York session is going to purchase price action, all right, we can see two previous sessions as to where they purchased price action from, which are this area here, okay, and this area here, as you guys can see, identified by my session split charts. Okay, we have New York session. We can see that they manipulated price, took a purchase or bought from, okay, at around 154, at around 151, 400 psychological level the first day, and the second day they bought again at around 152, 400. Okay, so two institutional orders for New York session. So again, if we're going to trade New York session, we have to understand that New York session, if they are going to continuously push price up, they are most likely not going to buy unless price is at a discount for them. Okay, so that's one thing to take into consideration. All right, as to why I got this certain psychological level. All right, now number two, the second reason. Okay, the second methodology as to why I thought price was going to respect this 152,000 psychological level and then reverse was mainly because of structure. All right, if we look at what structure and current price information is telling us, number one is telling us that price is in a current uptrend. Okay, number two, it's telling us that this is the last significant area of consolidation before the market broke previous market structure, i.e. created a new swing high in comparison to the previous highs. So if this is the last institutional order that was placed before price had the amount of momentum to break to the upside, okay, and create a new structural high, this is the last significant area, or what order block traders would like to call it, an order block area, where institution and smart money had an interest in price to drive prices higher temporarily. Okay, so again, based off our ideology of price coming into discount, tapping into institutional money and understanding that institutions are not going to buy high, they're going to manipulate price to push it down into discounted regions for themselves as to where they purchase price action from the previous days or previous sessions. All right, so if we're looking at where previous sessions purchased from, okay, we have New York sessions, we have Asia sessions, we have London. We see that they're purchasing from these lows. Okay, now currently we're operating significantly at a premium range. All right, now if the bank and institutions based off of structure are going to sell price, okay, we have to understand that as traders, right, as scalpers in the market, we're not going to trade against the higher time frame price action. Okay, well, right now we're on the hourly chart and we can see that the most optimum opportunities to take scalp positions are what? Can you answer that question? It is buying opportunities. As you guys can see, there was a buy scalp there during London session. There was a buy scalp here during New York session, another buy scalp there during Asia, another buy scalp there during London, and another buy scalp there during New York. So we can see that institutional money every single session is consistently buying price from lows. Okay, so again, 90% of traders will look at price action and they will assume that price is in discount because we had this massive sell-off here. And then we had a lot of bearish candlestick and price action in this area, all right? But what a lot of traders don't understand is this was an entire area of accumulation on the hourly chart, okay? Price completely halted in this area, changed direction, grabbed liquidity beneath the lows, and started to create higher highs and higher lows and broke out of this area of consolidation. This is a Wyckovian schematic where those Wyckovian traders that you see on YouTube will sit there and confuse the shit out of you and tell you to label all this stuff as a spring, a UTAD, ST, USPY, a creek, a jump against the creek, a break of that consolidation and all that crazy stuff, and they will have your charts looking all manipulated and kind of crazy and funky, right? Again, as a trader, if you're trying to become efficient in this market, you need to try your best to have your charts as decluttered as possible, okay? You want to have a very, very minimum amount of drawings in your charts. Drawings and drawing lines and trend lines and having indicators on your charts does not make you an efficient trader. Understanding price information and understanding where liquidity in the market lies and understanding time in the market is what makes you an efficient trader, being able to react to what current price action information is telling you. So 90% of traders will get directed because they think that the market is still bearish. But what they're not understanding is that current price information is telling us that we are bullish. As you guys have seen from what I just drew on the charts, institutional order flow after institutional order flow is taking buy positions. So again, if we're looking to trade this New York session over to the right-hand side, we understand that we're operating in a premium range. A premium range being that we're coming into a potential supply region where banking institutions have not yet reached that region, but most likely are going and attempting to come and attack liquidity above what? Above swing highs in this general area. Okay, where we know order block traders have some type of order block drawn off in this area, where their liquidity in the form of limits, okay, maybe at these areas here, maybe sell limits, where order block traders are looking for price to come up into this area, right, and then reject this order block over to the left-hand side and kind of give them some type of bearish impulsive move, where order block traders are going to be looking to take shorts from. The banking institutions know that. So what are they going to do? They're most likely going to target these highs, okay, to take out stop losses and activate buy stops that exist above these highs. So there's two types of orders that rest above these highs that are pending in the market that the market makers are going to come and try and liquidate, okay? So this is where order block traders, okay, when they get to this area and they take sell positions from these highs, right? And they're, a little bit in profit, and then the market respects their order block, okay? But then the market does some crazy stuff like this, takes them out, liquidates their position, and then reverses. Order block traders are like, well, what the heck? My guru and my mentor told me to trade from order blocks, and this is that order block right here, and it didn't work out for me. And this is exactly why, okay? Because that is not how the market works, right? You have to understand that the market makers are not trading order block strategy. They're not trading any Wyckovian strategy. That is all make-believe in the market. Yes, it is significant to understand how the market moves, but the market makers do not respect your labels, and you have to understand that, okay? So again, why are we targeting this area? Because I'm kind of getting off of track. But, all right, so we've already classified that the market is in an uptrend. We've also classified that the market makers have been purchasing price the previous sessions from discounted regions. We've also classified that this is the last significant area. If this is the daily candlestick open for today's price action, okay, for this day, March 9th, 2022, the previous day, banking institutions, right, if we're looking at the daily candlestick open in this area, okay, banking institutions purchase price from below this psychological level, which rests at around 152. Let's just round that off to 700. This is where the daily candlestick opened, okay, right here. And we see here how every single area beneath this daily candlestick open is where banking institutions purchase from. So based off the logic that I just taught you guys, again, not getting into extreme detail, this is all just logic. We know that if banking institutions during London or New York session are going to make a purchase in price action, they most likely are not going to purchase from a high, okay? They're going to purchase from previous areas where they added to their orders. And as you guys can see, 2 London orders took place down here at the lows and down here at the lows. So if London session is going to purchase, they're most likely going to purchase from this low or this low, right? And then if New York session is going to purchase, they're most likely going to purchase from this low or this low. So we have a general area based off of where previous market sessions and previous market makers have purchased price from, which is in this general area, which is below where price action is currently operating at, okay? That's one thing that we can kind of come into fruition with. The second thing is that we understand the area that the market makers last put in an order the previous day. So here's the previous day's open. This is the last area where institutions put in market orders the previous day. Okay, so this is all a daily candlestick. This is daily candlestick price action. Now we understand that the market makers operate on the higher time frame, correct? Okay, so this is all one institutional order on the daily chart from A to B. Okay, so we can now redefine our trading and go from this whole entire area, right, where we had identified that London session purchased here. So if they're going to purchase again, it's most likely going to be in this area. We see New York session purchased in this area. So if they're going to purchase, it's going to be in this area, and so on and so forth. We see another London session purchase here and another New York session purchase here. Well, we can redefine that, okay, by understanding that this is where the last daily candlestick open and institutions purchase on the higher time frame. So this is the last daily candlestick open. This is the last daily candlestick area that the market makers purchase from. So again, understanding things that I've taught you guys on this CYPRX YouTube. Jumping now down to the lower time frame, highlighting this area for you. Again, we understand that the market makers purchase from lows. This is where the last daily candlestick opened from and institutions purchased from. We can highlight this area of consolidation. I told you guys how this was a market institutional order that broke previous market structure. So now this can be classified as a BOS, okay, on the higher time frame, i.e. the hourly. So we'll go BOS, top, right? Now let's jump down to the lower time frame, maybe the 15, 10, or the 5 minute, to identify this area of consolidation and see if we can see a grab of liquidity, a higher low, a significant higher low that leads to a market break in structure, to identify an area where we can draw our Fibonacci from to get a more identified or a more signature discounted position to take buys from. Okay, let's jump down to the lower time frame. Let's go down now to the 5 minute. Okay, so again, here's that area where price broke structure on the higher time frame. Over to the left hand side, we can also see that this was an area of retail resistance, right? Retail resistance being in the form of a double or a triple top, whatever you want to call it. We know that retail traders most likely are taking sell positions from these highs. We also understand that institutional money in the form of buy stops is sitting above these highs, right? So we know that other institutions are going to be looking to come and target these positions, which they did, okay? They came and they liquidated any orders or pending orders or stop losses that existed above these highs, as you guys can see. But now let's dive into that highlighted area on the hourly chart. Again, look at this. This is where the daily candlestick opened from. Okay, paying attention to liquidity in the market and understanding accumulation as well as consolidation. Okay, this is consolidation or an accumulation schematic. Okay, what it is that I teach you guys on the YouTube channel. Again, paying attention to where the daily opened. Okay, we see the market create higher highs, higher lows. Asian session opens. We see higher lows that lead to higher highs. This is an uptrend. Okay, this is an uptrend, and price failed to break that uptrend. We failed to create lower lows and lower highs underneath of these structural lows on the 5 minute chart. What did price action do instead? Okay, price consolidated or accumulated. It continuously showed us the willingness to take orders from the lows, okay, or take sell stops, or impatient buyers in the market that were buying from these lows and couldn't wait for further discounted prices, and then showing us a willingness to go higher, leaving behind liquidity areas in the form of swing lows, grabbing those swing lows, reversing off of psychological levels, creating significant higher lows, and then rallying higher, creating the definition of an uptrend, higher highs and higher lows. So again, paying attention to in detail what it is that I show you guys on the YouTube channel. We have the significant area on the hourly chart where we know this was the last area on the daily time frame that the market makers purchased price from. So we have that area blocked off. Now on the lower charts, on the lower time frame, we can get in to structural details where we see a grab of liquidity that leads to a market shift in momentum reversal off of a psychological level. Look over here, 151,800, okay? I'm gonna mark that psychological level off for you guys. Boom, okay? So the market, this low, grabbed liquidity underneath of this low, okay? And then created a significant higher low. This was the last significant higher low before the market passed price action off over to London, okay? So now we know that if London session is going to purchase price action from, this is most likely the general area as to where they're going to buy price action from, because this is the previous day's area where the banking institutions added to their buy positions. Okay, so all we needed to do, again, paying attention to what I teach you guys on the YouTube channel, taking your Fibonacci to the higher low after the liquidity grab. Here's the most significant higher low after the liquidity grab, extending that all the way up. Okay, so now we have an area as to where we could potentially take our fib from the low to the high. However, price was not done yet going higher, so we have to wait. Look at where I put the targets at on March 10th to the CYPRX students. The reason why I put these targets out was because if the banking institutions during, again, London session being here, okay, and New York session potentially being here, right, we know that they're going to purchase in areas where they purchased from the previous day, which is this London session low here at around 151,800. Now look at where New York session purchased from. They purchased price from around 152,300. So we know that this is a significant area where the banking institutions, if the next trading day they're going to be looking to purchase price from, is the area as to where they're going to be looking to add to their orders. So let me get rid of this. Okay, and boom. All right, look at this. Okay, so getting rid of the replay tool. All right, let's extend this out, and I want to show you guys exactly what it is that I'm talking about. Okay, aside from all the drawings that are on my chart. All right, let me get rid of some of this so that way it doesn't confuse you, and we'll go back to the 15-minute chart. Again, if you're here with me so far, stick around because this is insane what I'm showing you guys. Proving my theory, look at this. London session push price action down into a 50% discount from where they purchased from the previous day. Okay, they weren't going to buy from a high. What did they do? They manipulated price to extend it down to give themselves a discount, and then they added to their buy position. Okay, New York session. When New York session got past price action, what did they do? They manipulated early buyers prior to New York session. Then they pushed price action down into a discount from where they purchased from the previous day. And as you guys can see, this is the area that New York session purchased from prior to the previous day. And this is the area that New York session purchased from the previous day. So these are two areas that New York session purchased from. If we are going to operate in New York session, you guys can clearly see that from the daily candlestick as to where I sent that price action information to the CYPRX students, New York and London both manipulated price to give themselves a discount. Okay, now I told you guys as to why I got that significant level at 15200. All right, again, based off this area of consolidation, we know that they're going to give themselves a discount. So taking my fib from the low to the high, extending that up to March 10th's high. Okay, and what do we see? Price came into 70 to 79% discount. I rounded that off to the psychological level 152,000. The CYPRX students know exactly how I get these levels. Okay, and look what we get. We get an injection of money into the market and price reverses straight from a discounted price from where banks and institutions bought the previous day. Now, why did I have the bullish targets of 15400? Let's be mindful again that I trade based off of logic in the market, based off of where the bank and institutions most likely are headed. Well, if they're not going to break fractal structure lows and create new lows, i.e. the definition of a downtrend, they are most likely going to continue their uptrend buying at a discount. So if they're going to continue the bullish momentum, they're going to attack liquidity from above previous market session highs. Well, if we look at the previous market structure leg that led us to the downside or the lows at 151,400 in this general area where price accumulated and then expanded out and created this bullish momentum, we can see in this bearish leg, there were swing highs where we have pending orders that rest above them that the market makers are going to attempt to liquidate. Okay, so that first significant area of the first pending order or the order block or region that retail traders most likely are going to be looking to take trades from is this area. And we know that we trade against retail strategy. Okay, so look at this. Look at the accuracy. If we know that retail traders have pending orders above these areas, we know that order block traders are going to be looking to take trades from these areas. We also know that there's a type of trader in this market that took sells from the supply region and their stop losses exist above these highs in over leveraged positions. Okay, so the market makers are going to be looking to come and liquidate these positions, and look what happens. Okay, the market makers come and target those highs exactly to the T. Okay, exactly to the T. So these were the targets that I sent to the CYPRX students. Again, this is just general basic knowledge. This isn't going into an extreme detailed breakdown of what it is that I cover in the mentorship. This is just to show you guys that the proof is in the pudding. I give my bullish and bearish targets on cryptocurrency. I give my bullish and bearish targets on any Forex pairs that I'm actively trading in the market to the CYPRX advanced students well in advance, days in advance before price action plays out. And I've done this multiple times for the students just to show them, okay, that we're not here to pop smoke on this YouTube channel. We're not here to give these unrealistic expectations from the market. We're here to teach accuracy in the market, okay? As a trader, as an active, profitable trader in this market, I'm so sick and tired of seeing how saturated this market is. If you guys are sick and tired of being lied to by these order block traders on YouTube, if you guys are sick and tired of paying thousands of dollars for fees for courses on information that you guys can find on YouTube for free, and you want some exclusive material that you cannot find on the internet or in any trading book, you guys, that mentorship is in the link in the description down below. We'd love to have you on the team. We're looking for highly motivated individuals that are willing to take their technical analysis to another level of understanding, okay? Again, and as always, blessings to you guys all. This is, again, just to show you the level of accuracy that we trade with here at CYPRX. I tried to beat around the bush with this breakdown just so that way I'm not, disclosing any extreme gems that I give to the CYPRX advanced students, but I hope that you guys had some key takeaways. Again, we're paying attention to liquidity in the market, time in the market, logic in the market based off of what the banks and institutions are doing on the higher time frame, okay? Blessings to you guys all. As always, be cognizant, be aware, make sure that you like the YouTube video, subscribe to the YouTube channel so you don't miss out on any further video breakdowns. I will see you guys in the next video. Everybody take it easy, be safe, be cognizant. Have a good rest of your day.